Good morning, good afternoon, good evening, everybody. Welcome to the Nest on Clubhouse. My name is Jim Chu. I'm in San Francisco, California, and I'm the CEO of Untapped Global. Our job at Untapped Global is to connect international investors with entrepreneurs in frontier markets, including those in Africa and Asia. We host weekly discussions about entrepreneurship and investing, like today on Clubhouse. And once a month, we host pitch sessions with startups and investors from around the world. You can find out more and follow us at Untapped Global on Twitter and LinkedIn, and you can join our WhatsApp community by going to untapped-global.com and clicking on Engage. Today's topic, it's a very exciting one for me, is African companies going global. I've come across so many great companies in Africa, and with more products and services going digital, on the cloud, distributed, etc., I see a great opportunity for companies in Africa and other frontier markets to access customers everywhere, especially the big markets like the US and Europe. We also see a lot of companies from places like Nigeria and South Africa incorporating their parent entity in jurisdictions such as the UK, the US, Netherlands, Singapore, etc., to make it easier to access global markets, but also to get around some of the regulatory issues and make it easier and feel safer for investors to invest. So there's a lot to talk about here, and hopefully we can fit it into an hour, but we will be also opening up the discussion to those in the audience who have experience on this to make comments and ask questions in the second half of the hour. So before we start the topic, let's introduce our panelists for today. Bob Skinstad, would you like to introduce yourself?
No worries, Jim. Thanks so much. I'll be a very small part of today. I'm sitting in London as the UK partner of Knife Capital, and Knife has been a player in the South African VC space for a number of years. Kit, my partner on the panel here, is Cape Town based, and Knife has predicated itself and its existence on the fact that African talent can go global, and in fact has niched themselves of investing in businesses that, after proving themselves and their innovation and their premise in a beachhead market in South and Southern Africa, can either sell themselves to an international market or sell themselves to a partner or a strategic partner that wants to take them global, and have managed to prove it on a number of fronts. So we believe completely in what you're doing here, Jim, and we think it's high time that people realize how much talent and influence African companies can have around the globe.
And they don't have to move to the US individually to do that these days, especially with so many digital services. You can have a truly global operation and still, with staff in South Africa, with sales staff in New York, et cetera, to make that happen.
Absolutely, and we believe in looking at the business models that take it the other way as well. Currently cost efficiencies can be achieved in African countries with world-class engineers, and like you said, either access to internet and cloud services, or just the ability to deliver from wherever you are in the world. COVID was the accelerant that proved to the world that this can happen quicker than we realized.
Sounds great. And over to you, Kit.
Oh, sorry about that. Yeah, thanks, Bob. I mean, not going to really introduce Knife as such, but yes, I think we'll touch on some of the examples and case studies of the portfolio companies of Knife and other VCs in South Africa and other African ecosystems like Kenya, Nigeria, to really hit that message home of the fact that African talent in the technology space is definitely there. It is cheaper, and it is in the knowledge economy very scalable. We specifically look at businesses as a venture capital company that have some traction, but that have hard currency revenue already a little bit, and we accelerate that. And that is a very enticing value proposition from an investor.
And Knife is doing quite a bit with helping local South African companies go overseas as well. Is that right?
Yeah, so we ourselves actually exported. I mean, the reason why we've got some of our team Bob Eben Davey sitting in Jersey, Bob Eben sitting in London, is because we ourselves got some family investment from the UK-based family offices, basically exporting and creating soft landings in Europe for some of our businesses. Not that everyone wants to go to Europe necessarily, but it is more that international mindset and the fact that you have many things to consider, which I'm sure we'll touch on in this chat, around intellectual property structuring, et cetera, you know, where eventually you have a large job creation base and a large developer base and that's in Africa, but you have global reach in terms of sales channels, clients, you know, agencies and business.
Yes, I'm very, very excited to talk about legal structures on this call. Well, joking aside, I think that's a major driver: regulatory issues and obstacles, and having the right jurisdiction for investors. Well, great. Thanks for joining us today, Kit. And then we also have on the other side, on the entrepreneurial side, we have Alpha Bamira joining us from Jakarta. Alpha.
Hey, okay, so thank you very much, Jim, for your wonderful welcome. I want to say, I guess, over here, it's about 11 p.m. Indonesian time. So I think it's a very kind pleasure to be with you guys tonight and just here to learn and share perspective of what's happening in the region in respect to, foreign investors or companies on the continent that wants to set up here in Southeast Asia. So what am I doing? So I moved here from New York. I used to live in Brooklyn, but of course, born and raised in Zimbabwe. So yeah, I've been in the US for 20 something years and decided to come to Southeast Asia. So in Southeast Asia, I'm building ProSpark. ProSpark is a learning platform to train, reskill, and upskill the workforce here in Southeast Asia. Our main target market is Indonesia and also the Philippines. We have in this journey for about 2.5 years now. We now have some major clients in the region, including Gojek, one of the biggest super apps here in Southeast Asia.
Congratulations.
Thank you. And as we speak, we should be completing the signing of our seed round in the next 8 hours. So that's why maybe tonight is going to be, drinking all night and partying and celebrating. So
I'm sorry, I thought you had already started on that one. No?
Just a little bit. I wanted to go through this session after that, and I'll go back to party. Yeah, so we're very excited into the next stage of ProSpark. I think this is a great step forward for us. Of course, raising capital and trying to grow the business during pandemic has been a challenge here in Southeast Asia, but we're very happy to welcome a new set of investors who believe in our vision and our mission with what we are trying to do within the professional development gray area, which we are really targeting in Southeast Asia. So happy to be here. Happy to share my perspective of what's happening in I guess US, but mostly in Southeast Asia, since I'm based in Southeast Asia. So I can talk about setting up business in Singapore. I can talk about Indonesia. I can talk about Vietnam. I can talk about Philippines, since we have operations across the region. So thank you, Jim, Bob. Thank you for thinking about me, and excited to be part of this panel. Thank you, bros. Thank you very much.
Thank you. So let me just make sure I understand. So you're from Zimbabwe. You started the company in New York. Is that right?
Yeah, so ProSpark was born and raised, I guess the whole idea was in Brooklyn. I used to live in Brooklyn, New York, straight in Bed-Stuy. So when I came down to visit my brother for about a few days in Singapore, then when I went back to US, I was like, man, I think I need to go back in, where should I build a company? So, this whole ProSpark momentum started on my desk in Brooklyn, New York. And say, instead of building this in the United States, I think I'm going to take, like the leap of faith, and I'm going to, move back to Southeast Asia and build this, within the region. But of course, the idea and the concept, it started on a balcony in Thailand, in Bangkok, over a couple of drinks with my buddy. And what we started to see is a lot of gaps in the market. But of course, in terms of, strategy, execution of how I was going to do it, it was back in New York, in Brooklyn, an interesting experience. And then I decided, instead of setting up my company, and I mean, I have like a setup in the US, like a prospect sales office, but we decided United States is not our target market. We don't want to play in the market. The market is already saturated. I guess the market is a little bit boring for us for now, but we really wanted to do something in the emerging markets. And that's why we decided to come and set up the holding company in Singapore. So all the investments go through Singapore and the capital is deployed across, Vietnam, Philippines, and also mostly Indonesia, since Indonesia is our what you call like our mother brainchild market as of now.
Got it. Well, thanks for that explanation. Thanks for being here. And we also have Christoph as well, who really plays both sides, both as an investor and entrepreneur. Christoph, would you like to provide a little bit of intro for yourself?
Yeah, sure. So maybe relevant to the topic today is the fact that I'm originally a French entrepreneur, came to South Africa as part of a management buyout deal, coming out of a corporate. And after the exit in 2009, became an entrepreneur in the tech sector. Today, I run technology company called Métis, which operates in various African countries and in Europe. So, and we have a seed fund called Africa Rise Ventures, which has a number of portfolio companies, one of them being Africa right now. That, as Lundi just said earlier, we launched an interesting report today to try to analyze the different models we have on the continent, and to just try to tell the story beyond all these numbers. We keep on getting bombarded by analytics, but what's really going on? What are the stories, And so, yeah, and maybe the fact that I'm French and I'm very connected to the French tech ecosystem, which has seen rising success this past 10 years, can talk maybe about scaling out of Africa into continental Europe and countries like France and things like that, and what are the initiatives around building bridges between African and European tech ecosystem. Yeah.
And so in your portfolio, how many companies have gone global or have gone from Africa to the US or European markets?
Question to everyone or just to me?
Great question to you in your portfolio.
Oh, look, what is global? I mean, I'd argue that global, there's different global. I think you have, companies can have success at a local level. I mean, look at YuppieChef, they just exited a couple of weeks ago, and it's a great deal for the South African ecosystem, but it's a local deal. The company didn't cross the Namibian border. They used to have that joke, customers ordering from Namibia, and they said, fortunately we don't deliver there, but if you come to the border, we'll hand over the product over the border. Right. They never went global. I say, it's probably a pity. I think YuppieChef could have gone in various countries, but it wasn't a brand that was going to go in Zimbabwe or Nigeria. I think it was a brand that could have gone in other types of markets. So then you can have success at a regional level. I mean, if you get Flutterwave, they're really a company very strongly anchored in West Africa. I mean, they're trying to go Pan-African, but they're really, really West African at this point. And then, you have the global play now, you'd say Jumia probably wouldn't go global, but they are obviously have a Pan-African focus. I think a company like Aerobotics is interesting because they can start in South Africa, explode in the US, and then go in many, many countries. But in our own portfolio, I mean, we're much more modest. We really we have a venture studio model, and we try to invest in really, really early stage entrepreneurs. We have an incubator in South Africa. And so in our portfolio, we have companies that are mostly focusing on the South African market, in a fintech space or in an energy management space. And obviously we have players like Africa Arena, which is really kind of a Pan-African play, but it's obviously not a core tech-enabled company. But yeah, I mean, obviously through Africa Arena, we see a lot of stories. And I think, Knife has a lot to talk about, I think, with the amazing companies like Data Profit, or Quicket, which are going. I think Data Profit is a bit like Aerobotics, could go on a global play. Probably Quicket is more with an African focus for now, but could go and compete with Eventbrite. Hey, kid. And yeah, but I think bottom line, what I'm saying is that I think what's really important is to keep in mind that global is not the ultimate thing. I mean, I think you got to define your own metrics of success, and you got to grind and focus on that. And it can be local, like a Yoppie Chef. It can be a regional, like a Flutterwave, even if I'm sure they want to go global. But it might be tough and so forth. So, yeah.
Also, I think that's a good intro to perhaps one of the first questions is, what's the value of going global? There are a lot of companies that focus on local and regional markets, as Christophe mentioned, but what is the value of going global? Do you get higher valuations when you go global? Are there better exit markets? Why are some of these companies doing that? Are there better customers? The question open to anybody.
Yeah. Maybe I can jump in there from a pure South African market, and there's obviously different elements of different ecosystems in Africa, but our ecosystem or our target market is quite fragmented, as a country, specifically in the B2C space. It is a very unequal society. Who do you focus on as your C? And ultimately, there are amazing businesses that really can go broad into their customer base, like Sweep South, which sort of does domestic worker matching, job creation, all those types of things. And while that business might have a very large target market in South Africa, other businesses, like Christophe mentioned data profit, AI for manufacturing. The manufacturing industry in South Africa is only so big versus Germany, versus the US. The motive, so we're currently setting our offices in Detroit. You have to look at that. One of our very successful, and we've exited that business, success stories in our portfolio is a company called FlightScope. As an example, what they did is micro radar, Doppler radar technology for, which they use to track projectiles and mainly applied to sports. So you basically have this device, hit your golf ball, and it tracks where the golf ball was going to go, analytics, all that kind of stuff, as well as tennis, as well as baseball. Now, the golfing equipment market in South Africa is non-existent, basically, well, versus customers like Dick's Sporting Goods in the US versus Europe and all that. So, but that business is a global business, but the assembly and the R&D and everything is happening in Stellenbosch. So there's many of those examples of why do you go global? Well, basically, some markets in Africa, and specifically South Africa, is the total addressable market is A, way too small, or B, sometimes even non-existent, and maybe this is the last example before is one of our portfolio companies that we exited to Uber Eats, was a online ordering business called Order Talk. And when we looked at the business from investment perspective, it's still very much a seed round. And, they did, online ordering technology, point of sale integration, all that kind of stuff, scheduling. And really looking at they were at that stage only really in South Africa, had made one or two clients in the US. And looking at a typical restaurant chain, or even in South Africa, you'd have to get KFC or McDonald's online to have 400 stores, type thing, In the US, you might get, in Texas, you might have an unknown restaurant brand that have 400 stores, which is the equivalent of. So basically it said, we'll invest in you guys, but we're immediately going global. So ultimately that business exited to Uber Eats with basically no South African clients, but run the development team out of South Africa.
And in that situation, how much of the operational staff, if you will, was in South Africa versus where your customers were? I guess I'm trying to understand how much of the product itself was based out of Africa.
So it depends from company to company, but if I just use those two examples, which are two polar opposites, the one example, FlightScope, which is the Doppler radar business, is still, the majority of staff is sitting in Stellenbosch in South Africa. The assembly is happening here. It's just cheaper to ship product over to the US and do transfer pricing on that. The R&D office is here. So everything still happens out of South Africa, except for the sales offices in Florida, because that's where all the golf courses are. And then the tennis businesses in the UK, because we have the Wimbledon contract and a few other things to look at the speed of ball and line calling and scoring and that kind of stuff. So let's say 80% of the staff is in South Africa, and 20% is sales staff and maybe maybe business development and those type of channels in the other countries. The other example, Order Talk, initially was 100% staff in South Africa, but as we developed over the years, it made more sense for the development team to actually move to the US, and that was more of an intellectual property play, and I know we're not quite in the structuring question yet, than a strategic play from a sales perspective. But that business over time was 80-20 the other way around. Where mainly the support staff and some of the developers were back in South Africa because of the time zone difference. It's quite nice to have a development team in the daytime in South Africa and in the nighttime in the US, and the other way around.
Gotcha. So a lot of the two examples you're giving, a lot of it was the intellectual property, the kind of the intellectual development that was in South Africa, whereas the customers and servicing the customers tend to be overseas in the markets where that market is largest and most robust.
Yeah, exactly. So again, we've got other opinions from the panelists to weigh in here. Yeah. But just to conclude, to answer your question, why do you go global? Well, first and foremost, I mean, a successful company needs a kick-ass product. It needs a large addressable market and a team that can execute that awesome product into that market. Now, problem one is the large addressable market, specifically B2C, in some South African markets are just not there. Even also B2B. Second reason, and you touched on it, valuations. If you look at some of the exits to trade sales to strategic partners, if you start grabbing attention in dollar-based exit markets, it's better than rand-based exit markets.
Yeah. So I'd like to talk about that for a bit. I've heard quite a few times from folks. Yeah, when you go from a local South African company, for example, to be a US company, valuations jump significantly, not just 20-30%, but multiples. So, and you alluded to some of the reasons, but how much of that really is the potential for investors to see an exit, such as an IPO or an M&A in the US, or how much of that is simply that the standard valuation for a Series A company is higher in the US, or is it both? And this is for anyone on the panel.
Well, I can talk quickly about our experience there. We've incorporated a couple of our portfolio company in outside of Africa, in France, for example. One of the reasons was that you got a much better access to a certain class of investor, particularly in early stage. So you have more liquidity in early stage fundraising, one. And second, the valuation metrics are much more favorable. I mean, if you invest in a company that has euro as the denominating revenue currency, incorporated in a European Union country, even if 80% of the revenue is in Africa, that's the case of our PayGenius fintech company. I see Sebastian, the CEO, is on the audience. So the company is headquartered in Europe, but 80% of its activity is in Africa. It offers us a lot of benefit in terms of using some of the incentives available in Europe. In France, for example, on R&D, you could have access to that, but also the higher metrics on valuation. Typically, at the moment, you're running on 10 to 14 times EBITDA level in Europe, for example, when it's much harder when you're in South Africa or in other African countries to talk about this type of metrics. I think this is also why in a research report we've just concluded, we see amazingly, for example, that a fintech in Kenya is on average valued twice as much as in South Africa. Why? Because for investors, it's much easier to invest or acquire a Kenyan incorporated fintech company than it is to do so in South Africa, because South Africa has all this IP, very stringent regulation and so forth. So just simple as that, the impact
Yeah.
of regulation on
So let's talk
valuation.
about regulation. I think regulation is quite an interesting topic. I mean, I invest fairly actively in Africa, and I would say over half, no, not even more than that, over 2/3 of the companies I'm invested in are domiciled in either the US, the UK, or the Netherlands. I find that very interesting. Is that purely a regulatory issue, or is it an intent to sell to customers in those markets as well? Go ahead, Bob.
Cool, thanks, Jim. I mean, I definitely want to defer to Kiet here because I think there's two parts to this answer. I think one of the things I just want to mention on the back of what Christoph said about those valuations, and I've received the Africa Arena report, and I was listening in earlier, and it's absolutely outstanding. So well done on the great work there from your team. But Jim, there's also a perception that you have to factor in here. You know, if you look at fintech valuations, and I know the guys have accounted for it in terms of numbers, but you know, Africa is a great unknown to a lot of people around the world, and you will have seen it, Jim. You know, emerging markets are treated slightly differently. You know, Kenya with fintechs, and Nigeria for that matter as well, have got valuations which are eye-wateringly expensive at the moment, but it's probably following a good trend in terms of, or it's following an international trend. I'm not sure about good, but it's certainly good for the entrepreneurs, which I'm delighted about. But you are also competing you're throwing apples and pears together, because intra-Africa, let's just say outside the South Africa border, a lot of the DFIs and the impact funds are a lot more active, and the deployment of funds, the metrics for deployment of funds are very different to a pure VC play. So a VC that says, hey, listen, I need a 30% IRR to make my return on my money. That's what I do for a living. I'm going to look at your business and I'm going to go, hold on. You are saying that because this is, you know, let's just say affecting economic employment or economic inclusion, it's okay to deploy money at a valuation that's completely scary because the impact funds are doing that. Now you're measuring two completely different business models with each other, and I think somewhere in the middle there is a confusion about Africa. I think we have to live in the space of conscious capitalism. We absolutely want investment in the entrepreneurs and the entrepreneurial endeavors and the businesses that are stimulating the economy from the bottom up, and that's where I think VC plays. But a case of just handing out dollars because dollars are something that you're given by governments because they feel that Africa, you know, needs to be given, skewing the market, I think that's a big problem. And I think, you know, the crossover for me is how we address that. Not necessarily stopping it, because obviously you want to address the problems themselves, but how do you merge traditional good VC and, you know, impact investing, and somewhere in the middle, I think the Africa answer lies. And you know, I'm very positive about it because I think we'll get there. But fintech and let's talk about like sort of early access wage businesses, which we've been talking to over the last couple of years, and I think the model is outstanding. You know, stop the big businesses from benefiting from the interest paid on staff. Get it out to the people and get them to be able to not go to loan sharks and people that are going to make their lives a misery, and by releasing their money earlier in the month or on a daily basis, or whatever is good for both, but add to it the education of the people. That is brilliant. But you can't then say, okay, but now you can only manage it like a VC, because the valuations, they just never touch each other.
Gotcha. Okay, thanks for that. Any other perspectives from Kit or from Alpha? I mean, from your fundraising, did it help to be looking at a global market or a Southeast Asian market in your fundraising?
Yeah, no, I think this is a very interesting discussion, right? I think it was a very good points. I was listening to Bob and Christoph with their perspective. So I think if you look, for example, in a Southeast Asia market as a perspective, if you're focusing on a country as huge with a big consumption like Indonesia, you don't even need to go global to get a bigger valuation. You got companies in this market like Tokopedia, like Bukalapak, Gojek, they're all big unicorns already in Southeast Asia. I'm sure you all heard that most likely Gojek is going to merge with Tokopedia to create a massive giant between e-commerce and also the ride-sharing services. So I think, yes, I agree with Kit. It all depends with your TAM. It depends with the local consumption. It depends on the size of the scale, what that market has to provide you. So you don't have to necessarily think just to go global before you really define and conquer what you can conquer within your, within your initial target market. Our strategy is quite simple, right? We are focusing on Southeast Asia, although right now we've already started to do things in Nigeria. We're looking into Nigeria lately and also Kenya. But of course, our growth strategy is going to be through like a distribution kind of a network, not necessarily going out there opening offices everywhere because our investors will never allow us. But the way we set up Prospark in the region is, of course, we have a holding company in Singapore. Absolutely no way I'm going to have a holding company in Indonesia. There's absolutely no way I'm going to have a holding company in the Philippines because, those are very complex markets, complex government systems, or maybe nearly non-existing IP, IP rights laws. So for me, the biggest risk for me to register my company in a country where everything is around the gray areas, the regulations are not well defined, data privacy laws that don't even exist, that's a big risk for us. So we chose to go to Singapore because pretty much for obvious reasons, if you're in Asia, typically you're holding companies in Singapore or you're actually in Hong Kong. So when you raise capital, typically in Southeast Asia, if you have investors right now in this round, I've invested in Vietnam, investors from Indonesia, I've investors from Singapore, investors from Malaysia, and also I've investors from Europe and also from the United States. That was my first time actually to get a VC fund from the United States joining us in this round. But what we see, what's happening for us is typically the let's say, even I was talking to some of the VC funds from Africa. I won't say their names. They want me to keep their names private. Not a lot of people really understand the dynamics of Southeast Asia market. But if you look at Southeast Asia trends, there's a lot of similarities with what's happening in Nigeria. I know we've been talking a lot about Flutterwave. There's a lot of investing in fintech. Is this the next biggest thing? Is it the next biggest bubble? You can actually see the similarities between the Indonesian market and also in Nigeria. In the Indonesian market, there was a big surge in investing in fintech. Every fintech coming up was getting funding. Every fintech was coming up, $20 million raise, $5 million raise. They closed a C, they closed a Series A at a fast surge. But what we see happening in this market is there's a big consolidation. There's actually fintech companies that are actually failing. Number one, they cannot get the license from OJK, some of the regulatory bodies in Indonesia and some other countries. Number two, they just grow so fast to the point that the pandemic hits, and then the B2C, there's a lot of defaulting. So I think in these markets, I can only tell you straight up, if you are as I work with some other people back on the continent, it's not easy for you just to say, I'm in South Africa, I'm in Zimbabwe, where I was born, and I'm just going to move to Indonesia and sell the product. But these markets are absolutely different. Culture-wise, the complexity of doing business, understanding how things flow. This is Indonesia. It's a different animal on its own, right? It's literally 99% Muslim country. There's a different ways of doing things. The way you set up the local infrastructure of the local company, how it needs to be tied to the holding company in Singapore, it's a different animal. You need a local partner. The complexity of finding even a local partner it's a different animal. So I think for us, what we've managed to do is, when we came in, I spent all my time traveling across the region, right? Bangkok, Ho Chi Minh, Hanoi, Jakarta, Manila, Singapore, trying to understand exactly how these markets are built and how are they different. If I fly from Jakarta to Ho Chi Minh in Vietnam, it takes me about 2 hours. If I fly from Jakarta to Manila, it takes me about 3.5 hours. But let me tell you something, Philippines is a different, completely animal compared to Indonesia, even if they're only 3 hours away. So there are some challenges in the region, But I think for us, what we've managed to do is to first our pre-seed round, our how can you say, a vote of confidence. We had to anchor ourselves into one country, which was Indonesia. We had to focus, and we're still focusing on Indonesia, even though we're now selling in Vietnam. We're also now selling in the Philippines, and also looking into selling in Nigeria, right? So that also helped. But now in this round, we've managed to expand our wings, now getting capital from Europe, getting capital from the US, and also actively looking to get capital, from other countries, which are still pending. So I think for us, being part of the holding company in Singapore, right? Of course, I looked at Cayman Islands, too far. That's not going to work for us. But I think Singapore is a great country to set up your company, right? Because in terms of, of course, data laws are well defined. There's IP, you can register IP, you can copyright off your information there. So it's a safe haven, right? And every investor from any in the world, when they hear Singapore, they're willing to invest. They hear Hong Kong, they're willing to invest. So I think if you're in Southeast Asia, if you want to move your business from Africa, you want to definitely move into the Southeast Asian market, I advise you to register your IP. To register your company in Singapore, if you can, if you want to locally raise within Southeast Asia. If you have a holding company in Cayman Islands, holding company in Rwanda, and you want to move your product and open up a PT in Philippines or Vietnam, if you want to raise capital in Southeast Asia, it's going to be very difficult. That's just the way it is, right? Because of culture and trust and things like that. So that's our little bit of experience.
No, thank you for that, Alpha. Very, very useful. And just as a note, we are in the second half of the hour. So if you are in the audience and would like to share your comments, experience, or have questions for the panelists, or just overall, please feel free to raise your hand and join us. And we have Sebastian, who Christoph referred to earlier, has joined us as well. We'd love to hear your experience as an entrepreneur working in both the European and African markets. Sebastian?
Yes, hi. Thank you for inviting me to this panel. I'll just offer my perspective in terms of having started a company in South Africa and then raised some investment in France in particular. I'd say, as Christoph says, the valuations are definitely better in Europe. And I think what I've experienced is that the investors in Europe really focus on whether you can grow or whether you can grow your company straight from South Africa into the rest of Africa at an early stage. So very often I've been asked, have you already managed to get out of South Africa? So their focus is pretty much straight away on African expansion, even if locally there's still an opportunity in South Africa. The second point that I wanted to highlight is, even though the valuation were better in Europe and the pool of VCs is much bigger than in South Africa, I found that particularly with the French investors, there was a lot of how can I put it? A lot of the need for education around the southern part of Africa. So the French investors are very good in Francophone Africa, but in Anglophone Africa, it's another story. So even though the capital was there, it needed a lot more convincing in terms of coming all the way down to the southern.
So familiarity with the markets.
Yes.
Familiar and how comfortable they feel with it. Comfort and familiarity with the markets.
Correct.
Gotcha. No, very, very useful.
Jim,
well, thanks for that. Yes.
Another thing that might worth consider is that we've had this great story in Cape Town of a company called Get Smarter, which was one of the largest exits out of this ecosystem. And what's interesting with this company is that it's really a company that was bootstrapped, actually couldn't raise any money for many years. Started in 2008 by two brothers. And they really leveraged on the low cost of delivery, employing a lot of South African engineers and people working on their content. And, it started with local university, local market, made some success, found their product market fit, still couldn't raise. And then, started expanding to other universities and other customer base, and eventually got acquired for $125 million. My point often is to say that this potentially was a candidate unicorn, and they might have sold, a little bit early, but they were definitely typically a business case of a company starting local and going really global, really, really fast, leveraging on low cost of delivery in Africa, also based on the same time zone of their initial large customer. Because the other aspect of it all, and I see that with other startups starting in Africa and growing in Europe directly, is that the corporate market is much larger in the US and Europe. So when you're in a B2B model, you cannot not consider that market and have an expansion strategy. Then the question is, are you better incorporated in Africa, or you should put your IP and your holding company in another jurisdiction close to where your core market is going to be? Because that's also what I heard before from some of the panelists. You got to be close to your customer. If your largest market is in Europe, well, you got to be drawn to Europe at some point. If your largest market in Africa, like Jumia or Flutterwave, yeah, you better keep your operations down here. So, but the business model of scaling from Africa on a low cost of execution, get some investors from outside of the ecosystem and customers more so, definitely very powerful. And I think more entrepreneurs should do that.
Absolutely. I mean, what excites me quite a bit, and when I last, and thanks to you, Christophe, for the invitation to join you for the Africa Arena conference back in November. What excited me about the South African market was not just that low cost, because there are a lot of low cost places, but also the familiarity of South African entrepreneurs with the use cases and the needs of American and European markets. And I think that combination is quite interesting, because you essentially have an undervalued asset, and if they are able to move to a US domicile and really hit the US market, they can be immediately worth a lot more. And so as you know, and this is a bit of a plug for something that we're doing in May, and then also in the fall, we are hosting investors from the US and other places to join us in Cape Town, May 13th through the 15th, to do a bit of a VC and startup tour to understand what the opportunity is. And we've set up a vehicle in the US to allow US investors to be able to invest in what are essentially South African firms domiciled in the US, and take advantage of the tax benefits of investing in a US C Corp, which is 100% capital gains holiday. And so if you're interested in that, please feel free to contact any of us or contact us at Untapped Global. But I really believe in the thesis of certain African companies going global and seeing a major boost in valuation and accessing different markets. So we have a bunch of other folks who joined us as well. Raj, please, we'd love to hear your comments.
Yeah, so hi Jim, hello everybody. Alpha, I owe you a response to your pitch deck to me, so I haven't forgotten. I'll come back to you on that.
Don't be too late. Don't be too late.
There's only 24 hours in the day.
I'm about to sign in 8 hours, so too late. You have to pay the legal amendment fee, buddy.
It's okay. So I had one question for everybody and a couple of observations. The question was, I mean, in fact, one of my portfolio companies is actually looking at where to house its IP, and they're a Delaware C Corp, and they're looking at jurisdictions like Singapore, etc., to house the IP. And I'm interested in people's perspective, whether you house the IP in a completely separate company, do you house it in a whole co? There are all sorts of tax and IP protection issues. I would say, as a general rule, you should never house your IP in the jurisdiction that, well, maybe US, I don't know whether the US is the exception, but UK is not a problem. But you never house your IP in the same jurisdiction that you're operating in. For example, I know, for example, that it's not a good idea to house your IP in South Africa if you're a South African company. So that's a question I had, and a couple of observations I had. One was, I think everything everyone said that you always want to have a whole co in a jurisdiction that you're comfortable and familiar with, and where you're trying to raise capital. I mean, I'm used to the UK jurisdiction. We have some tax advantages. There's the enterprise investment scheme and EIS and SEIS, where UK investors get between 30 and 50% of their investment back through a tax credit. So that's often very, very attractive for UK investors. Just done a round where, basically, if you're a non-UK investor in a UK company, you don't get the tax credit, but I'm investing and I'm getting effectively a 50% discount, but there's not a lot you can do. So if you're looking to raise capital and you can fit within EIS and SEIS, it's useful to look at the UK. I want to also pick up quickly on something else that Alpha said, which is kind of interesting, that comparison between Nigeria and Indonesia, that, there were so many fintechs that they all started gobbling each other up. And actually there was a lot of regulatory pressure. And I'm just wondering whether, with all the excitement in Nigeria around Flutterwave, Paystack as well, whether there's going to be some consolidation, whether there's going to be CBN interventions. CBN's already intervened in terms of the crypto trading issues. And I'll be interested in seeing that. And I think, but my final observation on the question that you have, which is that, should you be looking beyond your market? I mean, just to give you one company that we just recently invested in, it's a company called FinAccess in Kenya, and they basically supply back-end and front-end SaaS service to microfinance institutions. And they've really captured that market. And whilst the temptation is to go out and conquer Africa, conquer the world, I sense that it's too early. And I think it's always, where are you in the cycle, right? Because too early, and there's enough juice left in your home market. Does it really make sense to go to different market? So I think it's one of those questions that there's never one answer. It depends on the market, the company, etc. But I also think that whilst everyone wants to be Pan-African, everyone wants to be global, I think there's a lot of sense in the early stages of companies to be totally focused on your own market, which you understand, which you have contact, which you have networks, etc., and not get too seduced by this idea of being a global company or a Pan-African company. That's kind of my 2 cents on that question.
I guess it's more of a question about how big is your total addressable market at the end of the day.
That's true. Yeah, that's true.
Great, thanks for that, Raj. Comment, question. Anybody like to respond to Raj's comment?
I think, Jim, if I could just say something here, is that, and not a lot of people know this, that I've connected with Roger a few times, and we agree a lot on emerging markets, and I've got tremendous respect for him as an investor. And it's good to see you again. What I want to say is that the quantifiable difference between even just rounds, I was part of taking a Cape Town startup to Silicon Valley for, I suppose it ended up turning into a pleasure cruise, because it was great to see some of the big names of, the Sandhill Road and the nexus of where VC has sort of come from and affected the world. But the investment that these guys were looking at would probably have funded them for 5 years in South Africa and wouldn't even have qualified for pre-seed in Silicon Valley. And I know you've experienced the same sort of thing. And is the fact that that's happening adding to the value for Africa? Is it adding to the value for investors? If you can get this jurisdictional investing right, in a very sort of easy and strategic way, I think people would jump on board and say, hey, we've got a chasm of value that's available to us, and let's just jump in. But you've also got to realize that for someone to put $500,000, a wealthy qualifying investor in the States at the moment, that's 7.5 million rand. I mean, that's the revenue of a good small to medium enterprise, and the disconnect there is something we've actually got to address. We've got to say, look, let's make sure we jump over that chasm, because it's not going to help the investor in South Africa then to say, okay, cool, I'll take 50 or 100 5K checks from people in America who can't actually help me with my journey because I'm desperate for the money, as opposed to looking and going the distance. And I love the example of the Get Smarter guys, going the distance, bootstrapping, building the business, getting to a place where actually you've now got something that you could take on later on into America or EU or UK, because you've got a better business. And it's just, sometimes I think there's an educational bit that we miss out on for the entrepreneurs as well.
Great.
Thanks for that, Bob.
Hi, Jim, may I jump in?
Yes, please, Wilma, if you have something to address specifically to that comment. Yes, please.
It is, but also addresses your comment as well in terms of companies going global in general. So I just wanted to give a little bit of my background. So I'm based in Nairobi, and my experience prior was VC investor in minority and women-owned businesses in the U.S. Worked in tech M&A in Silicon Valley, and got exposed to investing in emerging markets at the IFC. And since that time, I've been in Nairobi since about 2015, working now to build out a genomics company, which is addressing precision health across the continent with a tie-in with the global African diaspora. For those who know the sector, it is the case that this is important because of the lack of diversity in clinical trials worldwide, which has implications for drug discovery, development, how our bodies react to drugs, et cetera. Basically predictive analytics for healthcare, and also with a private equity fund that invests in healthcare in South Africa. Said all that to say is that my perspective is one that's been informed by a lot of different markets and experiences, and here have helped with various ecosystems of entrepreneurs. I've been affiliated with 500 startups to other accelerators here in Kenya. Here's my contribution. It may have been said. I came on about 5 minutes ago, so excuse me if it's been said. I'm stating a case, but also making an ask. The case is this: as we think about African companies scaling into places like into America to increase their valuation through acquiring greater and larger customer markets, what we are seeing now is that one of the keys that's left on the table is connecting these companies to diaspora markets. I have a lot of friends who are Israeli, Chinese, Indian, and even Irish, and they all say the same thing. In our countries, the diaspora really, really help transform things. What we don't see in America is any structured support of African-American engagement with Africa. And we're doing that now ourselves. And we're seeing, for example, there's a shoe company here called Enda. And they've been on CNN. And they say, our largest customer market in the world right now, export market is the US, larger sort of segment within that market is the African-American market because of hip hop, shoe culture, shoes as lifestyle, not just from running in, et cetera, et cetera. So my ask is this, is that we all consider that, because this diaspora engagement, economic bridge has worked across the world. And I think there are some very complex reasons why, like USAID even hasn't gotten behind this until now. We had an event last year, which we invited pension fund managers, tech investors, leading entrepreneurs, VC investors, like Steve Case's shop in DC, Silicon Valley, and they finally got the message that they need to do better. And I just want to lift that up as something that now should be part of our global impact concern, because for those who are American like me in the US, this connection is the bridge to a greater economic justice. Because if we can get these companies and these entrepreneurs connected meaningfully, and those in Brazil who are of African descent, Europe, et cetera, connected meaningfully to Africa, it changes everything, not just for the continent in terms of money, but tech transfer, access to new markets faster. But in turn, urban communities can be transformed economically as well. And so I just ask you all to really think about that, because unless we had a global impetus for the impact movement, we wouldn't be where we are today. And in Africa, those of you who are here know that gender equality is a big, big issue here. And so this is the same sort of opportunity of our lifetime to make a lot of money, but also to balance out things economically.
I'd like to address that. I'd like to address that diaspora, that call to action. It's a very strong call to action. And it's interesting because I've seen it work. I've seen it not work, dramatically not work, in the sense that there is a lot of promise, obviously, for diaspora coming back or connecting different markets together. And in many cases, it's been dramatic, right? Taiwan Semiconductor Company, basically all this entire conversation would not be possible without that company making custom semiconductors in Taiwan. Well, that was somebody who developed some of the skills around semiconductors in the US and then went to Taiwan and started this company. And the list goes on and on and on. So there are those instances. But in the instances where I've seen the government try to get involved in getting diaspora to invest back in their home country, for example, and so on, I haven't seen that much success. And oftentimes it's governments or an appeal to people to, hey, go to Kenya or go to Haiti or go wherever it is. But they may not have the right skills to actually meaningfully contribute to that economy. They may not be investing in the right places. They may not have the background to provide that value add. So anyway, I don't have any specific conclusion to this, but I think it can go both ways. I think it can be a lot of noise without enough substance, but there are some nuggets in there that can lead to tremendously impactful change. So,
right. Can I just find that in 30 seconds? The reason why this is different is because when I say diaspora, although I highlighted African American, it's the contemporary and historical diaspora combined. So it's recent African immigrants who do have those local relations and local knowledge. But I think the best way I would respond to that and ask you to consider this, in Kenya, as well as most of the tech sector in Africa, I think Keith, you and I have met at a conference in South Africa, can attest, is that this model of expats coming to the tech sector, making money, growing businesses is working. It's just not working for Black people, right? And so, I think that there's a demonstration effect there, which is why I'm bringing this up, is that there has to be more balance in the ecosystem, and the diaspora that I'm speaking of has the same skill sets, if not more, in terms of education, pedigree, Wall Street, Silicon Valley, who can come back now. But the more is, it's more than just making money and the next unicorn for most of us. It's about meaning. And when you factor that into it, that's customer loyalty to the 1 millionth times 1 million. And that's why I'm saying we got to tap into this, because it's rational exuberance that's under-tapped. And I think that there's enough evidence now in Africa for expats coming in and driving largely the tech sector, maybe not in Nigeria, but in most other places, that we have to say, wait a minute, can we be doing this better? It's not either or, but both and. That it also includes the African diaspora who have the same skill sets we see coming in and the same connections, but just aren't really connected.
Yeah, great.
Thanks for that,
great
Wilmot.
point,
That's
Wilmot.
very,
I
very
agree.
passionate call to action. Thanks, Kit. Did you want to make a comment on that, Kit, before we go on to
I just want to make a comment about meaning. I mean, that Wilmot said, and sort of legacy building. And I mean, a lot of people on this call and in the audience here on this chat, it is actually about building an ecosystem and all those fluffy things, but it is about activism and really making sure that we actually build a legacy ecosystem for entrepreneurs to come. And it sounds very idealistic, but it is what we are trying to achieve. And I think it hooks on to what Wilmot said about meaning and about it. It is specifically if people invest in entrepreneurs, especially if people, angels that were entrepreneurs, they invest not only for the IRRs.
All right. Absolutely correct. Absolutely correct. I mean, I think mission-driven entrepreneurship or mission-driven investing, I think ultimately it's healthier. And I think that's what you're saying too, Wilmot. And we should encourage that. And it's okay to be upfront and clear about what our missions are. And I'm great for that.
Hey, Jim, can I say something, Jim?
Yes, please go ahead, Kingston.
Yeah.
Go ahead.
Oh yeah, cool. Pardon me. So yeah, Wilmot, you just took the wind out of my sails. It's funny. I actually was born in Ghana. I grew up. I was spent about 20 years in Ghana. I've been in New York City for about 20 years. So Kilimanjaro is exactly what we're trying to do in New York City. With our tech startup.
I have these connections in Africa, or have all these connections with African Americans in the United States. All these experiences. And Kilimanjaro, we started in New York City. So that's what we want to drive at. Begin to tie the whole global, African diaspora community and the African community together. Through our platform. We just pre-seed right now. So it's really funny that you brought that up. But I want to touch base with the Alpha. With Gojek, what is the marketplace system like? Why is it successful? With experience in Indonesia, if you could comment on
that. Okay. So you're asking me why is the market
yeah. So
model
we're trying to
successful?
do something similar. If because I feel like Gojek was built, for the Southeast Asian community, and it's a marketplace. So we feel like there's something possible for the African diaspora and African community on a global scale for something like that. So I'm saying, like, what are the nuggets in there that we could learn from as a startup, to apply to what we're working on in New York City?
Absolutely. Well, I mean, well, first, as I already articulated, Gojek is my client. So I signed my life away not to disclose much about what I know about their platform. Okay, because that's my client.
Especially given that this is a live show. So yeah.
Plus, I managed to get a good valuation because of them. So hey, you got to do what you got to do. Okay, well, let me explain in the best way I can, and hopefully, I stay within the right lane. What has really given companies like Grab and Gojek to be perhaps the best super apps in Southeast Asia? A couple of different things. I'll go back to what exactly, if I'm not mistaken, was Kit or Christoph. I think it was Christoph. Those companies, they have stayed in their lane. Okay, what does that mean? They focused, right? Gojek, when you think about Gojek Indonesia, you don't hear about Gojek as Nigeria, as Kenya, as Egypt, is all over the place, right? Gojek is by the people of Indonesia, by Nadim, the founder, now the Minister of Education. It's Indonesian based, Indonesian founded, it's Indonesian driven. So there's some form of a sense of belonging and a sense of foundation that's rooted within the whole Indonesian culture, with the whole Indonesian spirit. And part of that is the culture, okay? The Asian culture on its own, it's all about empowering their own people. I think one thing I've seen about these countries is this, right? I live in New York. I mean, technically I'm an American, but of course I'm Zimbabwean. Okay. One thing you see, I used to live in Brooklyn. How many homeless people do you see in Manhattan going uptown, actually to Harlem? Thousands. It's a lot of people. When you come to this part of this world, you don't see a lot of homeless people. In Jakarta, I have never seen a homeless person. Not to say they're not there, I'm sure they're there, but you don't see that. There is a sense of culture of I am my brother's keeper. I guess we call it maybe Ubuntu, back home in South Africa. There is a sense of belonging, there's a sense of supporting, there's a sense of community that's run so deep, which is sometimes very hard to see in modern or in some African countries, because there's so much individualism, so much competition that actually divides us among ourselves. But in terms of strategy-wise of execution, right, Gojek really knew exactly who was their consumer, okay? They zeroed down in understanding, like, for example, Indonesia is 280 million people. 70% of those people are below 30 years old. And between 18 to 25, that's the fastest growing middle class in the country. People are spending, it's a liberal Muslim country, a lot of resources. You know what we need to do? We need to improve logistics. People need to get from A to B. The biggest nightmare in Jakarta, if you've been to Jakarta, traffic congestion. A place where it takes you 5 minutes can take you 2 hours. Why? Well, we're just gonna give you a motorbike. Boom. Next thing, you get fintech. So I think they knew exactly who's their consumer. That's number one. Number two, they really ran behind the national pride of this is something of our own. We should support it. We should embody it. And let me finish off by saying this. If you see because right now it's a war between Gojek and Grab, fierce competition, right? Okay. Grab has been interestingly smart because actually one step back, Gojek now is about to go public. I'm sure you are seeing the news floating all over the place. I'm sure they're going to do like a special SPAC, special purpose vehicle, something like the SPV, right? So So what the Gojek did is strategically, they were not playing in Singapore. Okay. They went to Singapore because, of course, going to launching in Singapore, doing business in Singapore is going to drive up your valuation. Everybody knows it. There's no bullshit about it. It's just the way it is. And Gojek expanded to Vietnam. Why? Because they're getting ready to go public. They want a bigger valuation. They want to list in Indonesia with IDX, and also want to list possibly in New York. So, and then Grab is a very fierce competitor. And Grab really is a Malaysian, Singaporean kind of entity, but it doesn't have like a home, right? And Grab is fighting in Vietnam, fighting in Singapore. But what Grab has managed to do is Grab is more like very specific clientele with certain specific service, service deliverables. I can say also their tech platform is just, outstanding. But Gojek is just massive scale in Indonesia, and Indonesia constitutes almost half of GDP of Southeast Asia. So I think if you had to ask me, forget about the tech stuff. There is a sense of having a home base. Okay. You are Indonesian, buy Indonesia. Let's support one of our own. That is something that has made even Gojek one of the best super apps in Asia.
Well, thank you so much for that, Jim Chu. Thank you for that.
Thanks for that. Thanks for that, Kingston.
Yeah, thank you.
Yeah, so we will continue the conversation. Just to let you know that we are past the hour, and so in case anyone does need to leave, speaking to the panelists, feel free. But wanted to pass it over to the panelists for last words from you, and then we'll continue the conversation with Malik and Ike and others who have joined us. So and by the way, you feel free to stay on if you'd like. Just don't want to make you feel obligated to stay. So any last thoughts on African companies going global? Bob,
maybe just a sorry, Raj. Just a thought we touched on earlier, but in terms of the theme of African companies going global, yes, it's possible, and yes, there's a lot more needed from a funding perspective. But one of the things that one of the panelists touched on it, what we actually starting to see as a thesis is once an African company starts going global and really start getting into that funding cycle of saying, okay, well, hang on, there is substance here. There is a sustainable, repeatable business model that can get funded. Let's go for the funding round. Quite often than not, a strategic investor, as one starts really sniffing around the funding partner universe, starts looking at this business and saying, hang on, for $50 million, $100 million, $20 million, I can just buy the whole company. So let's just do that. So it leads to interesting exits. I mean, we touched on maybe Get Smart and exited too early, maybe Fundamo exited, maybe. Then we at the moment, right tonight, negotiating a fairly interesting but modest exit by those numbers for one of our accelerator businesses. But it is a global business already on a small scale, and it could be a big one. But it's exiting because the entrepreneurs are sort of just saying, well, let's just take money off the table and go. So I think what's necessary and needed is more funding from home soil, and it can come from the diaspora, it can come from more funds coming here or at the growth phase. And as Jim said, maybe via Delaware type structures to actually fund these businesses, to have the energy and the fuel in the tank to become global success stories. Because why are we not seeing them? Well, not because they're not there, it's because they get exited and consolidated in the process of growing, because it's actually just too enticing to buy them.
Because of the anemic capital markets serving some of those companies, right? And just, you had a short plug. I do want to plug again. We are trying to encourage more international investors, in particular American investors, to invest in South African companies going global. And if you're interested in that topic and like to join us in South Africa, please get in touch with us, untapped-global.com, and just feel free to get in touch. May 13th through the 15th is our next trip to South Africa. Okay, well, so with that, thank you very much, Kit. Bob, Alpha, Christoph, any last words?
Yeah, I'll jump in quickly, Jim, and say thank you and cheers after that. I think one of the things I want to highlight is that we've spoken about companies going global, but it doesn't happen unless the ecosystem gets built. And South Africa is quite genuinely 20 years behind the rest of the world. we talk about different types of funding, and Christoph and his team were talking about where the money comes from, because the money's got to come from somewhere for these businesses to go global. That's the whole point. And focusing on Africa and parts of Africa is exactly what we want people to do. But we've also been very privileged because of the interest in the ecosystem. We're starting to get, and it's slow, but slow and steady is probably the way we're going to go here. We are starting to get institutional investors from South Africa's core economy to understand that the new areas of growth could well be VCs. They could well be entrepreneurial candidates who need funding. And it's not only going to be corporate venturing, and it's not only going to be bloated exits, individuals who've left with a gold watch and a big bank account that then go back and put money into small businesses. It's got to start earlier than that. We've got we've got a couple of people on this call. We've been privileged to have an investment from the Mine Workers Investment Corporation, and they've been an outstanding traditional investor for a long time in South Africa, not necessarily in our VC space, but 3-4 years ago, they started looking at the space. They've swung the periscope, if you want, onto this little area, this little island that's going to become a continent, we hope. And I think kudos has got to go to the early movers, the vanguard people who are saying, well, there's real hope and reform in making sure you make the right investment in this space. And without it, without knocking on those doors 100 times over, we're not going to get it. We're just going to talk about what didn't happen and why we didn't go global, because there's not going to be enough money as a percentage. VC and small business doesn't get enough to move the needle unless we get the institutional investment houses turning around and saying, okay, I will allocate a small part of my investment thesis to uncovering and addressing the risk and looking at startup investing, because it's an asset class that is underserved. And we're privileged to have some investment from these guys. I know Tato's here and he's part of their team, and he listens into all these calls. I suppose he wants to make sure we're walking the talk that we're ongoing with them. But I really think it's a first step in the revolution that's coming.
Thank you. And by the way, just as a final comment to what you're saying, Bob, look, I'm sold, right? I'm sold on African companies going global, obviously, and in fact, we're intending to pull together a facility or a vehicle to bring hopefully a lot more American investors to South Africa. Yes. So with that, thank you everybody for being in this conversation. I'm going to drop off. Please feel free to continue the conversation.
Thanks, Jim, and thanks for your work in this space. Much appreciated.
Cheers, Jim.